Welcome to a special edition of Business Live from the Sky News City studio. The UK emerges from recession with stronger than expected growth. We'll look at what might be next in store for the UK economy. Business plays its part with investment on the rise. I'll be joined by the Director General of the British Chambers of Commerce. Plus, how the step up in housing market activity has boosted consumer spending. Good morning, this is Business Live with me, Ian King. The UK has emerged from the shallow recession it entered in the second half of last year, with the economy growing more strongly than expected during the first 3 months of 2024. The Office for National Statistics said the UK GDP grew by 0.6% during the 3 months to the end of March. That was appreciably better than the 0.4% that had been expected in the city and which was forecast by the Bank of England only yesterday. It represented the strongest growth for the UK economy since the final 3 months of 2021. Well, the strongest growing sector in the economy was production, including manufacturing, where activity expanded by 0.8%. Services, the largest part of the economy, expanded by 0.7%. But activity in the construction sector fell by 0.9%. Well, with me now is Vivek Paul, UK Chief Investment Strategist at the BlackRock Investment Institute. Vivek, great to see you this morning. I mean, what is striking is how strongly the growth was spread around the economy.
Agree. These are positive data. There's no doubt about that. And if you kind of compare to the fact that above consensus, you think about the fact that it is comparatively broad, you think about the business sentiment being good at the same time, this is encouraging. I think it is important, though, to put it in the bigger context. And even in your introduction there, Ian, you were citing kind of since a particular period of time. Since the end of 2021, the UK economy has barely grown. And I think for that length of extended period of time, I think that is comparatively rare by historical standards. So yes, positive data today, but there's a broader picture here which is important in terms of the context and importantly what happens in the future. And I think that's what, what we need to really focus on in terms of the future path.
I mean, the March figure in particular looked very, very strong indeed. Is there a danger that's been distorted by the early timing of Easter?
I think there's always a chance we should be wary of over-indexing on any one particular set of numbers, and in particular a monthly number. It can be pretty volatile. So I think the idea that this is better than expectation, I think that's clear. The idea that, we've more than, I guess, offset the Q4 of last year's sort of shortfall is also clear. But I think to overextend and kind of think about this one number and extrapolate it to the future, that wouldn't be what we should do.
One thing that did jump out at me, though, was that GDP per head was up for the first time in 7 quarters. I mean, that's really quite interesting. It
is. And I think, again, in particular with a number like that, we need to kind of think about the broader picture, I think, as you've said. It is up, but I think the important point is what will happen from here. And, the point about per capita or indeed the aggregate GDP levels, the UK is still facing structural challenges. So, yes, this data is positive, but this is an environment whereby the UK has sort of dynamics around supply of labour issues, which has been prevalent for a while now. We have fewer people of working age trying to find jobs in the UK now than we did pre-pandemic, which is quite a stark number. And then you think about broadly the fact that UK has struggled with productivity for a long period of time. And whoever is in the hot seats come the end of the year in terms of the government needs to find a fix to that problem, which has been a problem for a long time, at the same time as we have high levels of debt. So it's going to be a tricky environment to still navigate.
Now, the consensus forecast for annual GDP growth is 0.4%. Can you see there being upward revisions on the back of these numbers?
I think, many have started to kind of think that maybe there's some upside bias to those set of numbers. But the point is, even if you were to upside bias those numbers, we're still probably talking about something lower than 1%. And if you think about the historical context, that is still a small number. So I think this is where the context is really important. Yes, positive relative to the current expectations, but in the bigger picture, sub 1% growth is not something that historically we've been that excited about.
Do you think today's data is going to have any bearing on the Monetary Policy Committee's thinking?
Well, I think what we heard from the Bank of England yesterday, obviously they kept the policy rate unchanged, but I think they were telling us that they are keen to start as soon as they can. And I think the picture from that, I think, is unlikely to shift because of the numbers that we've seen today. We've seen in their own forecast, they anticipate inflation being below their target towards the end of their forecast horizon. That tells us that they're ready to get going. And I think their marginal preference is to ease policy. So I don't think that it'll be fundamentally altered by the numbers we've seen today.
I thought there was a very very interesting tweet this morning from Andrew Sentence, former member of the MPC, in which he said, why all the clamour for low interest rates when the UK economy is rebounding nicely without further monetary stimulus?
And I think, again, this is where we've got to kind of think of the broader context, right? So, I mean, as I said, one set of numbers, positive, is this going to be extrapolated out into the future? I mean, even the numbers you're citing there before, Ian, 0.4, even if it's higher than that in terms of the year, that is not sort of a particularly robust economy that that we need to kind of sort of celebrate too much right now.
OK, Vivek, we have to leave it there. Great to see you this morning. Thank you.
Thank you.
Well, while the Office for National Statistics was clear that stronger household and government spending contributed to the better-than-expected growth seen during the first 3 months of the year, it's also clear that businesses played their part, with business investment rising quarter-on-quarter by 0.9%, following a 1.4% increase during the previous quarter. Well, with me now is Siobhan Haviland, Director General of the British Chambers of Commerce. Siobhan, welcome to you. Do these figures reflect what your members are seeing on the ground?
Morning, Ian. So, the figures we saw this morning were absolutely welcome, that's for sure. And, we did our QES survey or economic survey at the end of last year. If you remember, we saw an uptick in confidence from business and that has remained buoyant. So good to see us coming out of a technical recession. But I think probably what businesses would say and what we would say is we are cautiously optimistic about the economy going forward.
Before we get too carried away, Siobhan, we should note that on a year-on-year basis, business investment was actually down 0.6%.
Yeah, businesses are still holding on to their cash. I mean, remember, Ian, we're coming out of a series of big shocks for business, inflation. We still have a really tight labour market. We have trade barriers, with our biggest trading partners, and interest rates are still high. And obviously they were held this week, although with an indication of sort of future reduction. So we won't see a huge sort of stream of investment straight out the gate, but these are positive signs for business. And what we want to see is policymakers, government continue to focus on working hand in hand with business to drive that investment.
I mean, drilling into the numbers, the ONS notes that inventories fell by £706 million during the quarter. Presumably that bodes well as businesses have to restock.
It does. And what business want to see for the future, Ian, is there are tweaks that government can put in place. So we want to see more on planning reform. We want to see businesses be able to plug into the grid. By government setting up that framework, businesses can come in behind and invest, and that investment will drive the economy forward. So that's a sort of virtuous circle, and that's where we want to see policymakers working closely with business to drive that investment, because that's what's going to make the difference.
One thing that the ONS pointed out is that company profit margins only expanded very, very slightly during the quarter. It feels as if there is residual inflation in the system, companies are still having to absorb that.
I mean, companies have had to absorb a huge amount of cost increase over the last 3 years. It's really tight, and a very tight labour market. Wages are going up, so it is really hard to find there is no extra cash lying around. So as businesses start to get back to growth, the economy starts getting back to growth, there will be more money to invest, and that's where we want it to head.
So obviously we had the latest decision from the Monetary Policy Committee yesterday. It's clear now that a June rate cut, the possibility of it at least, is on the table. What are you betting on that front?
So it's good that the committee sort of indicated what might be coming. Businesses thrive on clarity and certainty and planning for the future. So, we hope that will happen, because that means businesses will be paying less on their current loans and will be able to take out loans for investment. So we know that them heading in that direction will be a positive thing for business investment, and that's what's going to drive the economy. OK,
Siobhan, got to leave it there. Great to see you this morning. Thank you very much.
Thanks.
Some other business news stories for you now. And International Airlines Group, the parent of British Airways and Aer Lingus, said this morning it was well positioned for the summer after reporting better than expected profits for the first 3 months of the year. Well, IAG, which also owns Iberia and Vueling, achieved an operating profit of €68 million for the first 3 months of the year. That was up from €9 million in the same period last year. Luis Gallego, IAG's chief executive, said the early timing of Easter had been supportive, but also cited lower fuel prices and the benefits of investments to improve punctuality and customer service. He said the group had increased capacity by 9% in Europe during the period, in particular at Aer Lingus, British Airways and Iberia. The government has conditionally waved through the proposed merger between Vodafone and Three's UK operations after launching a review of the deal on national security grounds. However, should the merger go ahead, the pair will have to set up a national security committee to oversee sensitive work and regularly update ministers. This is because Three is owned by Hong Kong-based CK Hutchison. Well, the merger is being separately investigated by the Competition and Markets Authority, but shares of Vodafone have risen by 2% this morning. Ryanair said today it's putting on extra flights to take English and Scottish football supporters to and from this summer's European Football Championships in Germany. It's adding more than 11,000 new seats, some of which will be on existing routes such as London Stansted to Dortmund and Frankfurt and Manchester to Cologne. But it will also be putting on new routes, including Edinburgh to Memmingen, Bristol to Frankfurt and Glasgow to Cologne. Mothercare said this morning it's looking at funding alternatives and has launched refinancing talks with its bank. The specialist retailer for parents, babies and young children said it was seeking to renegotiate or refinance an existing loan on which it was currently paying an interest rate of 19.2%, but stressed it was not seeking fresh funding. Despite that, the shares have fallen 27% on that news. Well, Mothercare, which trades in 32 countries around the world, said its franchise partners achieved sales of £281 million in the year to the end of March. That was down 13% on the same period a year earlier, but it said it expects underlying earnings to be slightly ahead of the £6.7 million it achieved last time. Shares of Rightmove have fallen by 5% this morning after it warned that one of its key sales metrics this year would be lower than expected. The property portal said its full-year average revenue per advertiser would grow this year by between £75 and £85. That was down from the previous guidance of £100 to £110. Well, Rightmove said this reflected the fact it was doing a greater proportion of business with lettings-only estate agencies, which typically tend to be less profitable. Well, the better-than-expected GDP figures have been greeted with very little movement on either the gilt market or on the foreign exchange market. I can show you what the pound's doing right now. I mean, more or less unchanged against the US dollar. It's up 0.1% against the euro. On the equity markets, well, last night's gains on Wall Street were followed by gains overnight in the Asia-Pacific region. I think we can show you those. There we go. Look at that. The high point being there, the top right-hand corner of the screen. I'd draw your attention to the Hang Seng in Hong Kong. That hit an 8-month high during the session. Well, in Europe, there are records being broken here as well. The DAX in Germany has hit a new all-time high this morning, currently 2/3 of 1% higher. Talking points on mainland Europe today include Mediobanca. The Italian lender is up 3% in Milan after its quarterly results were well received. Well, here in London, after 5 consecutive record closing highs, the FTSE's at it again this morning, currently up nearly 4/5 of 1%. That, of course, represents another intraday high for the index. In terms of the gainers, well, Anglo-American is among the leaders, up 2% right now. That is on a report in the Financial Times that its South African shareholders are open to a possible takeover, would-be buyer Glencore. It's up nearly 3.5% on that news. Elsewhere, as I mentioned earlier in the programme, Vodafone up 2% right now after its UK arms merger with Three UK cleared a crucial hurdle. Not many blue chip fallers to mention this morning, but they're led by Rightmove, still off by some 5%. Outside the FTSE 100, Harbour Energy is leading mid-cap gainers for a second day running after yesterday's upbeat trading statement, while housing and consumer-facing stocks are all higher on hopes of an impending Bank of England rate cut. They include the house builder Crest Nicholson, which is up 4%, the paving slabs Marshalls, which is up nearly 5%, and the retailer Currys, all of those up by 3% or more. The first of those two also benefiting from positive broker comment this morning. As for the oil price, well, it's currently on course for a second weekly gain in 3. Barrel of Brent crude currently changing hands at $84.43 a barrel. That's up 2/3 of 1% on the session. With me now is Victoria Scholar, Head of Investment at Interactive Investor. Victoria, good to see you this morning. What do you make of these GDP numbers? How are you looking at those as an investor?
Well, it's interesting because obviously just yesterday we had signals from the Bank of England that it's preparing for a rate cut, but actually these figures are quite strong. I don't necessarily think that derails the case for a near-term interest rate cut, but it is good to see that March's figures were pretty strong and also February's figures were revised higher. But like you say, not too much reaction on the markets there, so not a huge surprise, but at least quite a bit of relief that we have moved out of that recession. So it is certainly a short, shallow recession rather than a prolonged downturn.
Yeah, in terms of equities, I mean, where investors will really be focused if they're betting on a UK recovery, I guess, is not the FTSE 100, it's the mid caps, it's the 250.
Yeah, exactly. But actually what we're seeing is that incredible performance for the FTSE 100 at the moment. And I think a lot of the rhetoric around the UK market lately has been pretty bleak. So at least optically, it's nice to see some positive headlines coming out for UK PLC once again. Perhaps international investors will be drawn back to potential opportunities within UK again.
Yeah, I mean, we should stress the FTSE is still at a discount to most of its international peers, not just in the United States, obviously, but in continental Europe as well.
Yeah, absolutely. But, you know, we've seen a pretty strong year-to-date performance, up over 8%, outshining the whole of the performance for last year already. I think twice as much gains we've seen in 2024 versus 2023 already. So quite a lot to cheer about. And, you know, for opportunistic investors, there is that discount and an opportunity there.
Is there more implied upside to the FTSE, given that there is still this valuation gap with its peers?
Potentially, although I think it has been driven by a few idiosyncratic stories, Anglo-American being a big one, of course, and then the defence and aerospace sector. We've seen BAE outperforming Rolls-Royce, of course, a lot of excitement around its CEO. So we'll have to wait and see. But I think a lot of it depends on the interest rate rhetoric and whether we do get that higher for longer interest rate sort of talk continue, or whether that near-term rate cut does finally come into play.
Well, you touched on aviation there. Obviously, we've had results today from IAG, which look very, very robust indeed.
Really good results. We saw first quarter operating profit of 68 million euros, which is far ahead of analysts' expectations. And of course, the first quarter is typically the most challenging for the sector. We're past Christmas, we're not yet into summer. And when we compare that to some of its rivals in Europe, like Air France, which missed expectations, it's impressive to see that it has managed to outpace those forecasts.
Yeah, and Lufthansa as well. I mean, obviously, Lufty's had a few issues with pilot strikes and so on, but I mean, it's showing a clean pair of heels to the both of those businesses.
Yeah, absolutely, and there's a lot to be encouraged about in terms of its strong Easter performance, the lower jet fuel costs, and also pretty strong forecast for summer as well.
Do you think this is going to continue? Is this sustainable, this sort of level of growth for IAG? I mean, I noticed Luis Gallego talking today about putting on capacity. I mean, those transatlantic routes really seem to have come back in earnest.
Yeah, I mean, I think this is a real comeback story. We've seen that the stock is up by about 18% already this year, and it's doubled since the October 2022 lows. But actually, if you look at the long-term chart, we're still a far cry from those pre-COVID highs of January from 2020. So it's very much a comeback play, and the analysts do appear to be behind it. But there is still a long way to go to try and reclaim those highs.
Yeah, so an awful lot of optimism around today, but Rightmove putting a bit of a dampener on things.
Yeah, and interesting because you were talking about the house builders there, and some of them really outperforming on that on the hopes of a rate cut. But Rightmove, despite that, still falling quite sharply today. There was quite a lot of talk about how the high mortgage rates are affecting affordability, how it's seeing lengthy completion times as well. And I think the fact that while we are expecting near-term rate cuts, people know that there's going to be more coming into play in 2025. So people who are looking to get onto the housing market are probably going to be waiting more until next year.
Right, Victoria, we're out of time. Great to see you today. Thank you. Still to come here on Business Live. As the UK exits recession, we'll look at how the increase in activity in the housing market has boosted consumer spending. Stay with us.
Independent, United Kingdom.
These last few years have seen some huge stories. And these stories have been driven by politics, by politicians, the people in power.
You must stay at home.
And it's my job to figure out how these decisions made by politicians impact all of us in our everyday lives.
This is the worst thing I've ever been through in my life.
People turn up here with their child stuff in a black sack and just say, don't want to.
And that is what it is. It's first-class poverty.
Is this an example of the welfare state failing?
We take you to the heart of the stories that shape our world.
These are stories that affect us all. Millions of children are now having to catch up. Some stories have changed all of our lives. Because like the residents, the staff are being infected. Politicians, they make decisions all of the time, and it's our job to hold them to account.
I wonder if you will take this opportunity to apologise to those families.
But in the end, the real power doesn't actually lie with the politicians. The real power lies with the people. I'm Nick Martin. I'm the People and Politics correspondent at Sky News.
I'm Greg Milam and I'm Sky's Chief North of England correspondent. We aim to be the best and most trusted place for news.
Welcome back, and now to our top story, that the UK economy has emerged from last year's shallow recession to produce its best quarterly growth in more than 2 years. Well, part of that was driven by consumer spending, which will in turn have been driven in part by a step up in housing market activity. Well, joining me now is Lucian Cook. He's head of UK residential research at the global real estate services provider Savills. Lucian, great to see you this morning. Any doubts at all in your mind that housing market activity has picked up?
Well, look, the data certainly shows a pickup, and I think that is a direct reflection of an improvement in consumer sentiment and buyer confidence because of the economy. I think it also reflects some improvements or indeed stability in the mortgage market. That mortgage market last year was incredibly volatile. We've seen much more stability generally through this year, despite a little bit of upward pressure on fixed rate mortgage costs over recent weeks. And all of that has meant that if you look at a measure like the number of agreed sales, for each of the last 4 months, they have been slightly above where they were at pre-pandemic levels at a time that we've seen a bit of a pickup in mortgage approvals as well.
Has the market behaved roughly as you would have anticipated had we been having this conversation on New Year's Day?
I think it's probably outperformed expectations a little. Back in November, we were forecasting that prices would fall by 3% over the course of 2024. Given what we've seen, and particularly given the prospect of rate cuts, just earlier this week, we increased that forecast. We're now suggesting that prices might rise by in the order of 2.5% this year. Now, that's not massive price growth, and it does reflect the fact that the market is still relatively finely balanced. I think the growth is still pretty dependent upon those rate cuts. The first rate cut is going to be crucially important for the housing market, but certainly the levels of activity that we've seen, some of the readings that we've seen on the lead indicators from things like the RICS Housing Market Survey have been more positive than we might have anticipated.
So in that forecast that you just referred to, Lucian, what kind of assumptions are you making about the path of interest rates this year? Oh dear, I think we may have lost Lucian. That's such a shame as well. It's been ages since we had him on the programme. He always has such really terrific insights on the housing market. Anyway, while we try and get Lucian back, why don't I take you through what's been going on the markets this morning. As you can see, very little reaction really on the foreign exchange markets to those GDP figures. A slight uplift for sterling against the euro, about 1/7% or so, but nearly nothing much to shout about elsewhere in terms of sterling's performance against, for example, the US dollar. If I show you the equity equity markets. Well, it's been very, very interesting. We've had this terrific run of late for the Nikkei in particular. You can see that rose again overnight in the Asia-Pacific region, up 0.2%, but it was really the Hang Seng that rose by nearly 2.5% on the session. The Hang Seng, of course, I should say, hit an 8-month high at some point in the overnight session there, 8-month high there for the Hang Seng. If I show you Europe as well, I mean, again, records are being set right all over the place right now. The DAX in Germany, the highlight, that is an all-time high for the DAX 40 as we speak. We've had some very strong corporate numbers coming out of Germany over the last week or so. For example, Siemens Energy, they reported earlier in the week, provider of power equipment, and they absolutely shot the lights out. I think their share price rose about 13% on the day. We've had a few disappointing numbers out from some of the German car makers, but nonetheless a pretty solid showing all round. Elsewhere, I draw your attention to the MIB in Milan at the bottom right-hand corner of the screen there, up 1% or so. We've had some very strong numbers out of the Italian banking sector this week. We had Mediobanca today. We had Unicredit, the second largest lender, earlier in the week as well. So the Italian banking sector looking pretty robust. I think we can go back to Lucian Cook now, which is good news indeed. Lucian, great to see you again.
Lovely to be back.
Tell me about your forecast. That was where we were at before we lost you. What assumptions are you making about interest rates this year?
Yeah, well, our expectation is that we see 2 to 3 rate cuts over the course of the year. Clearly, that's going to be slightly dependent upon what we see in wage growth figures, which are out next week. And also, I think the next inflation data is going to be really crucial to that. Nonetheless, an expectation of 2 rate cuts just begins to ease affordability. It starts to widen the pool of buyers in the housing market. And it's that really that underpins the prospect of some price growth this year. Albeit with the bulk of the rate cuts coming further down the line, I think it's still going to be relatively modest.
OK, briefly, Lucian, if you would. I mean, 4,200 homes are coming off a fixed-rate mortgage deal every day and seeing a rise in payments. How much of a drag on activity is that potentially?
Well, it's a bit of a drag on activity, but it hasn't really affected house prices. And I think that's because of the measures which have been taken by the lenders. The lenders have taken a pretty benevolent approach. They've worked with borrowers pretty hard to make sure that they can either go on to an interest-only mortgage for a period or extend their mortgage term. And I also think the market has been fairly heavily insulated by the mortgage regulation that we saw put in place by the Bank of England from about 2016 onwards.
I'm so sorry, we've got to leave it there. Good to see you again. Thank you. That's it from me. I'm back at 4:30. Hope to see you then. Gareth back next. Stay tuned. Cheerio.